In this tutorial, I'll be going through with you a stock called Raytheon Company. You can see the stock in Google and type enter. That's the name of the firm, and its RTN is the symbol in Nasdaq. It's 186.85 US dollars for one stock, and it's a billion size firm. A billion size firm means it's a big firm. That's brilliant, and it's paying a dividend. I just want to point out that any firm that is paying dividend, that means it's a positive news because they're financially strong. Because after paying their costs, loans, liabilities, they still have extra money. That extra money pays to shareholders as dividend. So any firm, even if the dividend yield is very less, even if it's less than 1%, that's a positive news because that's extra money of the firm. And let's go to Wikipedia and see when was this founded. I can see it's founded in 1922 here, right? Let's go back and see what the employees think about this firm. Copy this exactly from Google, paste it here, type Indeed, reviews, and let's have a look. I can see we have 3,600 reviews. It's 4-star. Check out the salaries they're paying, the photos, the jobs they've listed, the questions asked, and read through the reviews yourself. And let's go to Glassdoor and see the reviews of the firm. So we can see we have 3.8k, 3,800 reviews, and it's 3.6 star. And check out the jobs listed, the salaries they're paying, the interview questions, the benefits they're giving, and the photos. Please read through the reviews yourself. Just go to just your patents and let's have a look at the patents of this firm. Let's click enter. So I just want to point out, please look at applicant or assignee because these are people who have the rights of the patents, and they have patents in 2012, 13, a lot in 12, 13, 13. They have a lot of patents. Please look for recent patents in 2014, 15, 16 because that means they're still innovating. That's very important. And the more patents a firm has, the more stronger it is in the market, and the more difficult it is to beat the firm, which is the positive news. They have a lot of patents. Please go through the patents yourself. There's a lot of pages. Now let's go to Yahoo Finance, and I want to see what key executives are getting as salaries. That's very important for us to know. So I'll just paste it here and I'll click on the Nasdaq symbol RTN. I'll go to profile. I can see the sector, industry, and the full-time employees information, and I can see 5 key executives. Only 4 of their salaries have been shown. One, it says not applicable. That's very important thing because we need to know all the salaries of the key executives, but we have only 4 salaries. One is missing. Now you need to search why it's missing because the more transparency we have about the salaries, the more better trust we are able to build. Let's go to macro trend and see, compare the ratios. Go to price ratio, price book ratio, type in the symbol. I just want to point out, if the price book ratio is less than 1, that means stock is cheap, it's undervalued, it's a discount. If it's more than 1, that means stock is expensive. The higher the number goes, the more expensive it gets. This website takes some time to load, so don't worry about it because it has a lot of data, but it will make your life quite easy, so it's brilliant. Please let me know if you have any questions for me, or if I'm going too fast, I'll slow down. Please let me know if you would like to request me to make a tutorial on a particular stock to do research for you. Please let me know as well. So I'm just waiting for it to load. Okay, right now I can see that right now it's 4.26, which means the stock is 4.26 times more expensive to buy right now. Anybody who buys right now in August 2019 will be paying 4.26 times more money. That's expensive. Anybody who bought in 2018 March, they paid 5.91 times more money. So they paid $210 to buy something that was $35 worth. Anybody who, for example, bought in 2010 September, they paid 1.29 times more money. So they bought the stock for $36, and they got something that was $28 worth, but they paid $36. Right now, it's 4.26 times more expensive. Let's go to other ratios. I want to see current ratio. Let's look at current ratio. If current ratio is less than 1, that means stock is very risky because liabilities are more than assets. If current ratio is 1.5 or more than that, that means stock is safe. It has a good margin of safety. Please look for 1.5 or more than that. Okay, right now I can see, right now it's less than 1.5. It's a little bit less than 1.5, so it's a risky stock. Let's look at the previous trend. Has it ever been below, above 1.5? Yes, it has. So there are fluctuations, I would say that, but I'm looking for consistency. I can see that since 2011 December up till I would say up till 2018 June, it's consistently a safe stock because it has consistently been 1.5, which is brilliant. But just recently, since September 2018, it's less than 1.5. It's a little bit less than 1.5, but still, it's less than 1.5. So recently, it has become a little bit risky stock. Let's look at debt equity ratio. I'm looking for zero point 0.5 or less than that, for it to be very safe and have a good margin of safety. So this ratio will tell me if the company is mainly operating on debt or equity. I'm looking for zero point 0.5 or less than that. Let's have a look. Okay, right now I'm looking for zero point 0.5 or less than that for it to be brilliant. Right now it's a little bit less than zero point 0.5. Yes, that's brilliant. It's less than zero point 0.5, so it's a safe stock right now. That's brilliant. Let's look at the previous trend. Has it ever been more than zero point 0.5? Yes, it has. So I would say there's fluctuations. I can see that since 2005 up till 2011 September, it's less than zero point 0.5. It's a safe stock. Let's look. So since 2011 December up till I would say 2013 September, it's a risky stock because it's more than zero point 0.5, and then it's a safe stock, then it's a risky stock. So there are fluctuations. I would say there's no consistency, but since 2017 March up to now, it's less than zero point 0.5. It's a safe stock, but I would say there are fluctuations. Like I'm looking for at least consistency of 5 years, recent 5 years. So within recent 5 years, I would say that it's both risky and a safe stock. So I would count it as a risky stock because there's no consistency recently. So let's go to return on equity. I'm looking for 8% or more than that for it to be brilliant. Let's have a look. Right now, it's more than 8%. It's a brilliant stock. Let's look at the previous trend. Has it ever been below 8%? That's my question. No. Since we have data since 2005 December up till now, consistently it has been 8% or more than that return on equity. That's brilliant.